Hey everybody, Smart Silver Stacker here. Hope you're doing well. So we just heard from the Federal Reserve at the conclusion of their FOMC meeting that they've decided to cut interest rates by 50 basis points. Now, in and of itself, this should come as no surprise to anyone. This is what markets were anticipating, and the Fed did not disappoint. But what is somewhat surprising is the additional projections that were released by the Federal Reserve at the same time, which appear to have some significant bearish implications for the US dollar moving forward. So I want to go over those, and also I want to delve into the reaction in the gold price and the silver price to today's announcement and why we've just been given a very nice entry point into both metals. So let's get to it. Thanks for tuning into my video today. If you enjoy it and you get some value from it, please do give it a big thumbs up down below. And while you're at it, why not subscribe to the channel? Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. Okay, so I want to start off with these economic projections that were released earlier today by the Federal Reserve, and then we'll get into the silver price and the gold price and their reaction to the Fed's announcement. And this table here is really the critical one. It's titled Economic Projections of Federal Reserve Board Members and Federal Reserve Bank Presidents under their individual assumptions of projected appropriate monetary policy, September 2024. So this is sort of a summary of all the various projections from the FOMC board members. Now, you'll notice here that this is the federal funds rate projection on this line. You've got the median, the central tendency, and the range that these central bankers are giving their outlooks on. And then below that, there is the June projection. And pretty much across the board, what has happened here is not only did the Fed cut by 50 basis points, but all of these FOMC board members shifted their forward projections significantly lower. For example, in June, they were projecting a 4.1% median federal funds rate for the year 2025. Now, at today's meeting, that number has dropped to 3.4%. For 2026, they were projecting a median federal funds rate of 3.1%. Now that number has dropped to 2.9%. In terms of their view of the central tendency for 2025, back in June, they were forecasting a central tendency for the federal funds rate of 3.9 to 4.4%. Now, 3.1 to 3.6%. If we're talking about next year's range of potential interest rates, in June, 2.9 to 5.4%, now 2.9 to 4.1%. So not only did the Fed go for the bigger rate cut today, they also are telling us that there are more disproportionate sized rate cuts in the future. Now, this obviously is viewed as very bearish for the US dollar in my assessment. And I think that this is in line with the fact that deficits and debts in our economy, in our government, in our consumer spending habits, all of those things, the expansion of the credit supply and the enabling of that by the Federal Reserve is what we have to look forward to. Now, with that in mind, let's take a look at how gold and silver reacted to today's FOMC announcement. Starting off with this hourly chart of silver. So you can see that this candle right here, which represents the 2 o'clock Eastern hour, that's when the announcement was made, you had a big spike up in silver to over $31. In fact, silver got as high as $31.23. Then subsequently, as Jerome Powell delivered his post-FOMC announcement press conference, markets digested this, and it appears there was significant profit taking, and we had this big drop down to under $30. So tremendous volatility in the price of silver following the Fed's announcement. It's a similar story in gold. You had gold trading as high as $2,600.14, a new record all-time high intraday price for gold. But then that was followed by a big sell-off all the way down to $2,546. Now, both metals putting on a slight recovery here as the markets are drawing to a close, but I think it's safe to say we did get the proverbial sell the news moment, albeit a very volatile one initiated by a big spike up in the price of both gold and silver. But I want to look at this in the context of the big picture and why I view today's decline as being a significant buying opportunity in both metals in light of the projections that we received from the Fed which indicate that the amount of easy money coming our way is significantly more than we had previously heard from the central bankers. And also from a technical standpoint, when you look at the chart of both metals, so this is the daily chart of silver, and this is incredibly bullish at this point. We've got silver reversing its previous downtrend. You've got higher lows and higher highs here on this chart. And also, you'll note that I've drawn this symmetrical triangle here that silver broke out of last week. We had silver breaking out of this months-long consolidation pattern. Now, we're getting the sell the news moment where it is retracing down to the top trend line of this pattern. But the way that these breakouts work is once you break out of a pattern like this, the resistance turns into support. And it does appear that silver is bouncing nicely from this breakout level. And that means, I think, that we're being set up here for a big bull run, probably very soon, in the price of silver. And it is a similar story in the price of gold. So you had gold in a months-long consolidation pattern, just like silver, trending sideways in this channel. Then it broke out of it the same time silver was breaking out of its pattern. We go on to record all-time highs. Now, in the sell the news moment, yeah, gold did spike up to a new record all-time high, over $2,600. But what's it doing now? It fell right back down to this line and it bounced off nicely. So I think what we're being set up here for in the metals is the resumption of the bull market. It appears that now would probably be a nice entry point for both metals. It's not financial advice, but I am considering adding to my positions on this pullback. And I think that moving forward, what we're likely to see is that the price of gold, as the dollar is debased, is going to bounce off of this line in a very significant way. And I think we're going to get a similar story in silver. We're going to see a bounce off of this line. Now, you know, from a technical standpoint, there is a little more room for silver to fall here. I'm not saying this is going to happen tomorrow, but when you're taking the long view as a stacker, when you see what's going on with debts and deficits exploding, when you look at how the Fed is accommodating those fiscal policies in Washington with a return to easy monetary policy, even as inflation is not back at their targets, even as silver is breaking out, it's up over 30% year over year, even as gold is taking out new record all-time highs, the Fed is telling us that they are going to print more money even than we had previously anticipated. So let me know what you think in the comments down below. Did the Fed just give the green light for massive dollar debasement? Are gold and silver about to experience a significant rally? That's my take, but I would love to hear what you have to say. Do me a favor, smash that like button, leave a comment down below, and thanks for watching, everybody. I will catch you next time. Smart Silver Stacker out.